Great to see you all. Welcome to the second monthly market outlook of the month of July. Last week we had a fantastic monthly market outlook on July 1st. Found a lot of great candidates, a lot of which worked out right away. I found some candidates that were, one-day winners, week-long winners, and some that we were looking for winning throughout Q3 and Q4, so anywhere between 3 and 6 month movers. I'm going to cover some of those candidates that we looked at last week, also talk about a couple of new candidates and flip through some charts, but I wanted to make sure that everybody can hear me, so if you have any issues here hearing me, let me know right now as we begin here our second monthly market outlook for the month of July. So before we get to the candidates, I always like to start the monthly market outlook with looking at higher time frame analysis for some of the bigger futures contracts that we cover. Just looking out, not just a month out, but also maybe into the next quarter or even to the end of the year. So that's what we're going to do right now. And I wanted to start off with the YM. The YM is one that I kind of wanted to kick things off with. So let me bring that up right now with Thinkorswim. Here we go. And that's not the YM. Here it is right there. There's the YM. Okay. So we are at a very, very curious zone in the charts here. Over the last 18 months, we've seen perhaps the most volatility that we have in perhaps a decade. We've had quite a bit of uptrending behavior over the last 10 years. A little bit of sideways action here with another big rally. But here recently, since last January 2018 that is, we saw a significant sell-off over the course of about a week or so, a bounce back to the midpoint of that range, and that gave us a very important key range here with these levels right here. This key range is very important, and what we mentioned before was the magnitude of that sell-off. The magnitude of that sell-off was likely created in order to keep prices in check for the next year. I mentioned that prices could, for the most part, stay inside that range throughout the rest of the year, and that's pretty much what happened, except for a couple of weeks outside the range here. When price got outside the range right here, which was in late September, we held a monthly market outlook, which was last September, and I mentioned that this was a very ominous part of the chart, and we could likely see a rotation back to the midpoint of that range, followed by the potential to see a move across the range to the bottom end. That happened to be Q4, where Q4 was significantly bearish, and you can kind of see how that played out. We had a fresh high right here above the previous high. That's an all-time high. Then we had a higher high, but it was a higher high failure, a rejection of that high, and that led to a pullback into this zone here. Now this pullback was very important. We'll zoom in on it right here. The pullback was very important because what happened was price had a higher high rejection, pulled back, and you can kind of see that uptrend was still intact at that point. Higher value relationships on the pivot range month over month, and then you had this bullish rejection pattern right here inside the PIMA trigger zone at the pivot range, a nice rejection buy signal here. The next day was a midpoint retest. It's textbook stuff that looks perfect for another bounce play. But what happened was this day instead. On that day, the market took out the stops. And when the stops came out, it was a tremendous sell-off that took out basically 2 months worth of rally all in one day. From there, we had a pretty sharp bounce and then another decline. Another big bear market bounce and another sharp decline. Another big bear market bounce, and then the big sell-off of all sell-offs here occurred, and we got to move all the way back to 21.5. And remember, this thing started at about 27K. So that's a huge move. It all happened in Q4, and that was the most significant move we've seen so far to date in quite a while. Now, again, the reason why I bring that up is because we're right back at that zone yet again, and we're showing the same type of behavior. We're developing kind of an expanding range type of pattern where you have a high here, then a higher high, and then you have a higher high here. This high right here, which was a few days back on Friday, took out this high, giving an all-time high at 27K. But each time, this one sold off tremendously to a pivot low. From this high, it took out this low. And now we're up here, sitting up here again. Are we about to see another big tumble that takes out this low? Or do we just kind of drop back and hit this recent support level? Or what are we going to see, right? And so if you draw some kind of similarities between last time, which was right before Q4 here, where you had that pullback, and then right in here it looked like it was going to be a bounce, but it sold off instead after rejection. That's the exact same play that we're seeing right now. You see the previous month's high right here, 26.9 or so, and then you see the new high on Friday posted at 27.009, and that's kind of a higher high failure where we pull back. Today, you're seeing a buy type of candle here where you have a rejection of these 3-day lows. You have a nice rejection day where price leaves behind a bullish tail. And now we're sitting up here at these highs looking like another buy the dip opportunity is underway. The problem is we have Fed Chair Powell speaking tomorrow morning, testifying tomorrow morning, 9 a.m. Central, and also on Thursday morning at 9 a.m. Central. And depending on his testimony, we could see either a big continuation or any late buyers that are coming in right now could be used as fuel to run the downside sell stops. And if this thing sells off, because here's the previous high, here's the previous month's close, if we sell off from here, we will break through the previous month's close and drop into the pivot range. We will likely drop all the way back to the midpoint of the previous month's range, and that's basically 25.8. That could just be a very near-term decline, and it could take a matter of a few days. So again, this is going to be very interesting to see how it plays out. One thing I've mentioned in the trading room here is anytime we get to these highs, I'm usually all about buying the dips in an uptrend, right? If you're trending higher, buy the dip, right? Buy the dip right here. Buy the dip right here. At some point, it's going to fail. It fails here, and then it continues. Then it tries here and fails. And here we are again. I'm usually about buying the dip in this case, but we're sitting at highs. We're sitting up here at highs that we haven't seen really ever. And that is the spot where there is the most amount of risk. Because if it can't go higher, the stops will come out and you will get a tremendous drop. So when you look at this thing, say in a weekly time frame, this will kind of shrink things up a little bit for us. You can see this is very typical. You get a big uptrending market here, and then all of a sudden you see range formation that looks like this. This is an expanding range that's developing. Again, if we cannot find any kind of strength to get through 27K, then we have to go down by some degree. Do we come back to the midpoint of the key range here, which would be 25,886? Or do we come all the way across to the bottom of the key range at 23? Or do we drop and take out this low here and come somewhere around 21K? At some point, we're going to have to decide, do we extend this move up, or are we going to start to see some weakness? And at this point right here, I usually am a little bit more cautious. I'm not usually the one that, screams from the mountaintops that we're about to see a sell-off, because this market has been a bull market for 10 plus years. But back here, we did mention that this thing could drop pretty significantly. We got short, and again, I think it surpassed even what I thought could happen, but it had a significant move. Back here, when we had the significant move that began, we knew that this was already getting a little bit overextended. It had a parabolic shape to it, and whenever it sells off, you're looking for that sharp low so that you can then create a range. So we had these two moves pretty much pegged. Over here, it's a little bit different. It's a little bit different, but it's consistent with what you would normally see if you were to see some sort of decline of some magnitude. So again, going to keep an eye on about 660 or 600 rather. That's going to be a very important zone to watch. You can see right here, this is the previous, this is the current month's low, basically, but that's the previous month's close. You got a nice little box in here. If it can't hold this zone, it's going to open up some downside, and it could be pretty significant how big of a move it comes. And as we saw in May, the move can come swiftly. It can come swiftly, and the rebound can be as swift or even more bullish. So again, it doesn't mean that we can't bounce after the sell-off occurs, but up here at these levels, I think you have to be a little bit more cautious. That doesn't mean you can't buy the dip right now. It's just if you start to see some weakness, if price starts to push through the bottom of this recent low, I would cut it short right away. So I just want to give some context here because we're kind of at that spot across the board. If we look at something like the ES, you'll notice here the ES is very similar. We're up here near the highs. Again, this was another one where we were above the key range high. Here's the key range high. There's the level. We were above it up here, and we weren't finding, additional continuation to the upside. Instead, the stops came out, and we dropped to the mid, we dropped to the low, and then some. We've since come back full bore, but now we're here again, where it looks like it's a buy opportunity. It's a pullback in our PIMA trigger zone. It's my favorite buy opportunity, but it's not my favorite if we're at all-time highs, because at some point someone's going to be left holding the bag, and that could be quite the tumble to the downside. 2960, a break of that level, could open up quite a bit of selling pressure, and I would say 2850 would be an easy target to the downside. That would be the midpoint of the previous month's range. Here's the previous month's low, that blue line. Here's the previous month's high, that blue line. And when the previous month's high and close are very close to each other like they are here after an elongated move, if you cannot stay above that zone, you at least come back to the midpoint of the previous month's range. That's the bottom pink line there, with a shot to rotate all the way across the range. So I am just being a little bit more cautious up here because of where we are. Obviously, a lot depends on tomorrow's Fed, right? FOMC, Fed Chair Powell testifying tomorrow and Thursday, and that could be very important to future directional conviction. So continue to watch this and where we are in the charts. I wanted to talk now about some of the candidates that we looked at last week. I failed to record the session, which was a bummer because it was a great session. This one will be equally as good, I hope. And I wanted to talk about some of these candidates that we looked at. Some of them were one-day winners that we were looking for. Some of them were swing candidates. Some of them were 3 to 6 month candidates. I'd like to give a little bit of something for everyone that comes as, to the outlook. So this is one of those candidates that is a 3 to 6 month candidate. This is one that could play out fantastically heading into the end of the year, perhaps even into the beginning of next year. For those of you that have followed our trading here at PivotBoss, you know that this one is one that we doubled from the 30 to 35 zone into the 60 to 70 zone. And then now you're seeing another compression of the range. And I believe that this one is likely building up for another double attempt. You can see the key range that I've developed here. That impulse sell-off from that high of 74.81 sold off until it couldn't go any lower. That was 51.37. It bounces back to the midpoint of 63.09. That sell-off after this tremendous rally to double, that sell-off was designed to keep prices inside the range, to build energy, to facilitate trade at new prices. And now that key range gives us additional targets to play toward, whether we break to the downside right here or whether we break to the upside. Because Tandem has been so bullish, we had it as a long candidate at $4 going to 12, and I thought, wow, it tripled. This is amazing. And then it ended up going all the way up here to 52, and I thought, wow, I undercut that one. So after that major continuation to 52, that's when I mentioned to our group that, if we can get in between 30 and 35, it could be a double to 70 because of the key range that had developed here. It put the target at 70. I doubled right there. So again, over here, we have another key range. And the upside target here is 98.25. You got a mid target here at 86.50. So because the target is $98, you got to be able to see prices between 45 and 50. If it can get between 45 and $50 here, that range right there, that could be a great buy candidate for a potential double between 90 and 100. Again, the upside target is 98.25. So this one would take a drop to this low, and if it gets to this low, that's a spot to trap bears. Anybody that gets short too late below 50 might become trapped. You got a quick target to 63, 75, 86 half, and 98 quarter. So those are the 4 upside targets if you can get in between 45 and 50. It's the exact same play that we had last time. Over here, this was your key range, and I mentioned there could be a trap down here, and then that trap could be released to the upside, and that's exactly what happened in that case. I think this one is much more developed. It looks much better than it did last time, and the way that it's built up over the last 3 to 4 months, 4 months, 1, 2, 3, 4, and change, that means that we could be looking at a trending breakout move of about 4 months whenever this thing gets rolling. So again, are we going to see some sort of sell-off that takes us between 45 and 50? If so, that could be a fantastic candidate to double it on the upside. Even from current prices, if it were to break out, again, that would still be a pretty good percentage gain out of this one. So this is one of those long-term 6-month out candidates. It's still not even in a prime entry zone, but one thing about this one is it likes to bounce off the 200. You know, the last time it got above the 200, it rallied. It touched the 200 perfectly, it rallied. The 200 right now is 52 half. So again, if it were to come down in that zone, it could be a great move. So what are the odds of that sell-off, do you think? You know, I think the odds are pretty decent because of where we are in the charts in the broader market. You know, it's all tides. You know, the tide lifts all boats. It'll also sink these boats if the tide drops. And I think that where we are in the charts, you know, again with the YM being so high up there, if the YM, if the S&P, if those start to drop like we think it could, I think that'll be enough to drop this thing down to 45.50, and then that would be an opportunity to watch for a continuation play to end the year. So I do think it's pretty decent. Now, having said that, I am still long this position from the 30s. I doubled on half and then still holding half. So again, I'd still be holding some of that if it did drop, but looking to add to double on the next size as well. So again, this one, I think it has a pretty decent shot to come down here and challenge this low. Especially with lately it's been forming lower highs and lower lows. It has been chopping around value here on this short-term basis. So I think it has a pretty good shot. I don't think it's a long shot at all. So that's one long-term candidate there that we looked at last week. Another one here, this is a short-term candidate we looked at. This is July 1st, so I talked about the candidate here. I'd gotten in at the close of this day, and I got in off the $16 or using the $16 calls. So the 16 strike calls in the money, and the very next day it pops up. I took half off somewhere in here, and then looking to take the next half off at 18.75. It got pretty close yesterday. It got within about 20 cents of filling that next target on the second half. Today pulled back a little bit, but I still think it completes the move. That was one of those one-day, or rather the swing ideas. So we start with Tandem, and Tandem was a 6-month type of trade opportunity. This was more of a 5 to 10-day opportunity. And you know, again, when you have a very strong trend like this, where you have a very narrow range, it breaks to the upside. These rotations are very powerful here, especially when it comes into the Pima trigger zone. The Pima trigger zone is that spot right between your 8-period average and the 21 period. So that's my 8-period pivot-based EMA. That's my 21-period pivot-based EMA. And when they're all stacked and sloped and directionally trending, when it comes back into that zone, that's the zone to buy it ahead of the next bounce. This is the zone to buy it ahead of the next bounce. And it hit it again today, and it bounced out of that zone. So I'm still holding the second half here. One thing I like to use is my PivotBoss ADR targets. Many of you are familiar with those targets, but basically I use average monthly range to identify where the high probability target zone is. So from this low, that green dashed line is the low of the current month. or the current month's low. From that low, we can forecast higher average monthly range over the last 10 months. That's 100% of average range. That's 75% of average range, these two green lines. And so in most cases, if you find a strong low, you'll see that price goes right to that target zone in most cases. So I'm trying to milk this thing and get it up to that target. Again, I took some off a little bit shy of where I wanted to, but yeah, I was looking for a move to 18. It got close. I took half anyway, and now looking to take the rest off somewhere in this area by the end of the week. So again, this is one of those ones where if you have a strong directional trend, pullbacks to the PIMA trigger zone provide very good buying opportunities. That was one that has paid off so far. In the money call in that case. UDR, this one's been a really good one here on 2 rotations. This is one that I really talked up last week in addition to WELL. So UDR and WELL had the same pattern. This is a pattern that I really, really love. It's a pattern that is very, very powerful. You don't always see it, but when you see it, you tend to see it in bunches, and it tends to work out tremendously. That pattern is this right here. It's that strong rejection low where you have a big high range day here, and it takes out multiple day lows and then closes strong, up usually above the previous session's midpoint. And when that behavior happens, like this behavior right here, these 4 days or 3 days or whatever it is, the next day tends to be explosive. And in one morning, this thing opened and just took off and rallied tremendously that day. By the end of the day, it gave a little bit back, but that's a one-day type of trade. You can play it for more days as well, but if you get in at the close of this day and then you get out at the close of this day, it's usually a huge winner. The last time this one had that was similar, was right here, and you can see the type of move it had there. It took out multiple day lows and then rallied tremendously. It's that type of day. And this one was great. It happened again. You can see right here on Friday we had it as a long candidate again. It took out 2-day lows, and then you can see on Monday, yesterday, it rallied tremendously right away. Today, gap down and then hit to new highs yet again. But this is a pattern I really, really like. I call it a fridge trade. When you have a beautiful pattern and setup like that works, mark it up, put it on your fridge, kind of like your children's artwork, and just continue to kind of ingrain that pattern in your mindset. And you can see again over here, WELL was another one that was like that. This one here sold off, got a couple of narrow days, and then you can see this day right here took out multiple day lows, but by the end of it closed back above the previous close, right near the midpoint. This is a high range rejection right there, which means from the day's high to the day's low, that range is bigger than normal in most cases. That's a pretty aggressive rejection. And when you see that setup, that tendency, this is what you're looking for the next day. You're looking for that explosive breakout move where it rallies throughout the day and holds near the close of the day by the end of the session. And that is exactly what we got the very next day after we held that monthly market outlook last week. You can see again over here, we got another high range rejection on Friday, and then 2 strong days up again. And what makes this powerful as well is typically speaking, you have directional conviction, as this one does. And at times, even if you don't have directional conviction, you also have market structure support or resistance. So this is market structure where you have this key range here. That was resistance. It became support. It dropped to that area. You can see the LVN, and then this thing launches off of there. So it had a lot of great tendencies here. But this is one that I mentioned last week was a one-day winner. If you can get in on that one, you're going to be very happy by the end of the day. And you tend to see it often. This pattern happens quite a bit, but it doesn't happen all the time. But when it does happen, you tend to see it in bunches. All right, let's take a look at a few more. OSTK is one we had as a long candidate here, and this one has essentially doubled since we started looking at it, or very, very close to it. Huge move today. Major reaction by the end of the day, which is very curious. As the market rallied, this one was dropping in the last 30 minutes to an hour of the day. But this one we had as a long candidate on this day. It was a bullish outside day. You can see how big that day is compared to average. You can also see that this had a lower low here versus the previous day. The close was above the previous day high, so that's a bullish outside day. For those of you who have read my book, Secrets of a Pivot Boss, that's one of the patterns I teach in chapter 2 of the book, and it's just a fantastic pattern. But it always depends on where it's at in the chart. It's not always going to be perfect, but when you see the right ones, I mean, they tend to work out very nicely. What I liked about this one is that it had a bit of a rounded bottom here. You had the big breakout there, and then what we talked about was if it holds on this pullback, it could essentially rally to 17 to 18. I picked 17 to 18 because it was the target zone and also where the 200-day moving average was. But I also mentioned if it can hold 12 bucks, if you can get in around 12 bucks, you could likely double this one from 12 bucks to 23 to 24, which is the recent pivot highs up here, right? These are the recent highs. You likely have a shot to get up there. Now this one has been incredible. After that big outside day, it held the midpoint at 11 bucks and has gotten as high as 1926. This day was a 25% winner day. This one was up also about 15% until it pulled back. We talked about this one on the first trading day of July. The very next day, it had a failed low, and I mentioned a pullback entry to 12 bucks can double it, right? It can double it. The very next day, it hit a low of 12.20, so it got within 20 ticks, right? It got within 20 cents of that $12 level, and then launched. So you can see right here. So this is the monthly market outlook last week. That's the failed low. Another bullish outside day, and it launched to the upside. Yesterday was a huge day through 2-day highs. Stop run day up. Today, major rally. Kind of failed late in the day once it hit the 200-day moving average. But this one has been tremendous, going from $8.96 to $19.26. It has doubled just in the last month alone. And since we talked about it, I mean, again, this price was, hanging around 11 bucks on our entry point zone, from 11 to 19 bucks, almost doubling from there alone. So this has been tremendous. Now, this one has been one that has rallied from 10, 12 bucks all the way to 90, and then it dropped all the way to 9. So it has quite a bit of upside that it can see. I'm not expecting it to go back to 90. Again, all we were looking for was for this thing to get back to 23 to 24 on a long-term basis and to get to 17 to 18 on a short-term basis. So it's already hit our short-term target. And again, once you see a rejection like this, there may be some sort of pullback, but if that pullback finds additional rejection here, it could be the next launch point to the next upside target. So this one's been fantastic. We talked about that one last week and have been talking about it for a few weeks now. Another one we're looking at is MDLZ. This was a short-term 5 to 7 day move. What I like about candidates like this is the type of price action that you see here. You see it's more of a fluid price action. Very structured. It just moves with great fluidity. There's not a lot of gaps there. It's not a bunch of crazy moves. It doesn't do all of this. It's just very fluid. And that's the personality of the stock. The personality is for very fluid price action. It goes up and does its thing. So when we looked at it, we had it right here as a buy the dip candidate off the PIMA trigger zone. It also had a higher value relationship, which when you have a higher value relationship, you're looking to buy the dips for a continuation. This has done a really good job of bouncing on the first few days. Right now, it's actually sideways for about 2 to 3 days. That sideways range is likely building energy for the next breakout move, where we could see quite the rally here out of this move. So again, this one has already hit new highs after the first couple of days where we talked about it. But if it can hold 55, it probably has a continuation to between 57 and 58 here. That was our original target. And again, using the low of the month, which was July 1st, we can forecast average monthly range and our high probability target zone to between 57 and 58, those two green lines. So we still have more upside as long as it can hold 55s here. Another one we talked about last week is, what is it, CVNA? This was an inside value relationship. It hasn't really gotten off the mat just yet. What I like about inside value is that it's an explosive pattern. So it's basically when these pink lines are inside the previous month's pink lines. So it's inside value. It means you have compression and get ready for some sort of expansion. This one looks like it's still kind of compressing, but it has the potential to explode down the road. If it can get above 68, it opens up perhaps another 10-handle move up towards 78. So this is something to watch as it has perhaps another leg higher. If you want to see a great example of this, Walmart was the best one from last month. You can see right here, this pivot range is inside the previous month's pivot range. It opened with an explosive breakout right here, and it rallied the rest of the month. It was a huge, huge breakout move, and that's the type of explosive action you're typically wanting to see out of that pattern. This was also a buy candidate for us here recently last week on that pullback and that signal into the PIMA trigger zone, and we had targets at 112 and 119. So it hit the first target yesterday, which is 112.66, I believe. And then we also have a target up here at 119 down the road. That's a target that could be hit over the next month or so. So again, we have this Walmart looks tremendous. If you look at the weekly chart, it has gotten a breakout from this larger pattern. So you have this larger pattern right here that has developed over the last year and a half, and it got the breakout here recently and rallied. This could only be just the beginning of what could be multiple iterations of upside price action by the dip opportunities, and forecasting a move to about 140 in this one. As long as it can stay above 105, 106, I think this has a good shot to get up here toward 140 based off of the price range here. So this one's looking pretty decent here early on. This could still pull back a little bit here and still provide some great buying opportunities, but this one looks like it has a long-term potential to reach 140 maybe by the end of the year or by first quarter next year. RDN was another one we looked at last week. This one also was an inside value relationship. So again, you can see right here, this pivot range is inside this pivot range. Inside value, that usually suggests compression of price range. And if you can get some directional conviction out of there, you could be, on a home run spree to the upside. We got a pretty solid first week rally out of this one here. This week we've seen a pullback right into the PIMA trigger zone, which is now starting to rise and provide support. Not the most bullish, but again, it's an early pullback that could provide the next rally up. So we'll see if this one can get going to the upside. But anytime you have 2 months of compression, whenever you get that expansion move, if this is the breakout, you tend to see about 2 months of trending behavior. CTL was another one here we looked at as a change of bias candidate. Now this one has fallen flat and has not done a darn thing. So nothing really to look at here, but the reason why I bring it up is because it's a candidate that can have tremendous change of direction. You can see here pivot ranges are lower and lower and lower. That denotes downtrending price action, but last month it broke above that range, made it support, and created a higher value relationship. And that is usually the first step to seeing multiple months of uptrending behavior. Now it has done absolutely nothing this month, but I just wanted to talk about the idea here, the concept of changing the bias of the downtrend to an uptrend and perhaps getting a bounce up toward 14 if it can continue to hold, say, $11. Now I wanted to talk about a couple of newer candidates here. I'm going to bring up Visual Trader here. And one that I wanted to look at is YEXT. look at a daily time frame here. Now this is a Chinese stock here, so again, you got to be careful with Chinese stocks because China trade war has really hit some of these very hard, and additionally, you know, the trade war is not over. So who knows if it's over soon? Who knows if it is not over for a while? You know, sometimes it appears that the Chinese want to outlast Trump and see what happens at the next election. So I mean, that tells you anything from being done quickly to not being done at all. And what's that going to do to their market and ours? So you just got to keep those questions in mind. But what I do like about this one is the compression of these bands. These are my PivotBoss bands here. These are standard deviations of VWAP. So this is a 1 year VWAP, and that 1 year VWAP helps you identify long-term value. And then you have 1, 2, and 3 standard deviations of VWAP above value, and then you have 1, 2, and 3 standard deviations below value. And when that is the case, you get to find opportunities that are super overvalued or super undervalued. For example, when price is down here, price is significantly undervalued compared to you know, composite VWAP. And so at times this is the best spot to find opportunities that could rally toward the opposite side of the range. And so another thing you tend to do with this is when the value range compresses. When it compresses inward this way, that tells you you have significant price range compression here. You have a flat VWAP as well, which means we could be looking at some sort of expansion ahead. So this is one of those ones right now. I always say that, you know, trying to time a breakout can be very difficult at times, but this is one of those indications here when you get a pinching of the bands and a renormalization of value in the value range there. That tells you that perhaps a breakout is coming very soon. And we may have already seen that happen here today. This one was up 3%, 3.3%, but a very nice breakout move, and it could be the beginning of what triggers a rally, maybe into the mid-20s here. Right now trading 21 bucks. We could be looking at quite a move higher. The other thing to look at here is how compressed this range has been over the last 3 to 4 months. You know, this is March, April, May, and June. That's 4 months plus some. That means if we do get a clean breakout, it could be 1, 2, 3, 4 months of rallying. So we could be looking at a rally into the end of October if this really wanted to get going. So again, this is one to watch for a breakout opportunity. If it does get a breakout, we could see multiple months of price action out of this range. Another one here I wanted to talk about is Square. Square is also showing similar type of price action here, where you see mostly sideways action for the most part inside the wider range here. And then you have this wide range here, R3 to S3, flat value, and now you can see it has pinched inward to show an even more narrow value range there. So now, huge day today. This one was up 6.4%. Is that the beginning of what could be a breakout opportunity? Because if so, if price can get through these 83s here, 82, 83 zone, it may start an uptrending move where it goes to challenge the recent highs at 100 and perhaps even pushes through those highs over the course of the next many months, maybe perhaps into the end of the year. So that's a nice long-term opportunity right there. And I also wanted to show here what some of these markets like the ES looks like with the bands as well. So this is something that you always have to be a little bit cautious of. You can see right now price is outside of R3. So right here, price is outside of this R3 band. Again, that's the third standard deviation above VWAP, and if it can't stay above that level, it tends to rotate right back to VWAP. That would be about 27.75 or so, 27.80, and it would also come back to recent support. If it does stay outside that range, then you tend to see this R3 band start to rise to provide support, and then it starts to ride it like this as support as it sees major expansion to the upside. Now again, we'll see if this is a failure or not, but the fact that we are outside of R3 when you have mostly a flat VWAP, that is usually an indication to watch for a trap and a failure in many cases. So I'm not saying it can't break out and rally, but again, many times I'm looking to fade these types of moves, and so being outside of R3 up here is very interesting, and if it can't hold outside of R3, that could signal some trouble ahead. The NQ here shows that price is right at R3 at the moment. The last time it was at R3 was right here at the end of April, the beginning of May, and that led to a rotation right back to VWAP. We're there again right now. And this is what I was talking about before. If it can't stay outside of R3, then you likely come back to value, which is VWAP. So in this case, if we cannot stay up here, again, if we fail below, the lows of this month, perhaps we rotate back down to value. That's going to be about 7,200 here, and that could be a significant move that doesn't need to take long, right? The last time it did this move, it did it in a matter of 3 weeks. So it could be another move where we see it very, very quickly. So that's going to be something to watch out for, but that's a huge red flag at times when you're right at R3, when you have flat bands and a flat VWAP. It could be something to look out for. When you're looking at something like crude oil with these bands, you'll notice that crude oil is compressing right now. It's compressing at the moment. You definitely have the highs from October. It was at 76 and it dropped all the way to about 42.50 or so. Just a tremendous sell-off that we saw there. Look at the lower highs here, look at the higher lows there, and that has led to bands that have been this wide. Then they shrunk a little bit to this wide, and now they've shrunk yet again to the width that we're currently seeing. So this is a compressing situation here, and again, it could suggest major expansion is coming at some point fairly soon. So anytime you have this compression of the bands, I'm always paying attention because that can really forecast major movement to come. 55 has been a significant CLVN in the charts. If it can stay above 55, we may have more upside toward about 62 to 63, maybe even up toward those 66s. If it fails to hold 55s, it could be significant. We could be challenging 50, and then all of a sudden, 42s are the next level down. 42 is major support. Price cannot get below that area or it opens up quite a bit more downside. So I just wanted to share some of those charts here with the higher time frame PivotBoss Bands. That pretty much does it here on the list that I wanted to share. Again, we talked about some of the long-term candidates, talked about some of the shorter-term candidates that we looked at last week. We'll see how this continues to develop heading into the rest of the quarter. We'll look to provide another monthly market outlook at the beginning of August, and I usually try to do it the first trading day of every month. I know I missed a couple of months here earlier this year, but for the most part we try to get it done, and we got 2 this month, so that's good. Alright everyone, I wanted to say thank you all very, very much for being a part of the monthly market outlook. This is being recorded and will be posted as soon as possible. So if you missed any part of it, or if you had any screen glitches here as Espo's talking about, you'll be able to go back and view the recording for whatever you missed. Thanks a lot for joining me here today, and I will see you all soon. Have a fantastic night, and take care.